friends, this is Raman Gill with your weekly Forex market analysis for June 5th, 2016. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investment needs, I recommend you talk to your investment advisor. As usual, we'll start by taking a look at our economic calendar, then we'll move on to commitment of traders data to see how the bigger players are positioned, and finally we'll take a look at our charts and see what we are in for this week. Looking at the Forex Factory calendar here, this week we have a lot of central bankers talking, so please do expect volatility in the market this week. To start things off, we have Fed Chair Yellen speaking on Monday at 12:30 p.m. Eastern. Ahead of that, we have German factory orders at 2 a.m. and Centix investor confidence number for the Eurozone. On Tuesday morning, we have cash rate statement and RBA rate statement. We did see a drop in Aussie interest rate from 2% to 1.75% last time. However, at this point, they're not expected to cut the rate. We can expect some dovishness in the stance from RBA just because we have seen a big move up in Australian dollar and they wouldn't want their currency to be overpriced. As a result, we may, even if they don't cut the interest rate, there may be some dovish comments in their rate statement, which could help the Australian dollar drop. And then on Tuesday, we have Halifax HPI number for the British pound and then IVPMI for Canadian dollar at 10 a.m. Eastern. We also have Japanese current account, which is the trade balance number, and final GDP number, which will be important for Japanese yen. And then also trade balance number for China. And if the trade balance number is negative here, it could have a negative impact on Australian dollar and New Zealand dollar because they are one of the biggest trade partners with China. Going into Wednesday, we have manufacturing production numbers for British pound and then building permits for Canadian dollar and crude oil inventories. We also have official cash rate for New Zealand dollar and then Reserve Bank of New Zealand rate statement and monetary policy statement. At this point, according to the calendar here, they're expecting a rate drop from 2.25 to 2%. So that's what the market is expecting. If they do drop interest rate there, we could see a big drop in the New Zealand dollar. So we'll be mindful of that. However, they may not cut interest rate at this point, and their language may just be dovish because New Zealand dollar has been gaining lately as well, just as Australian dollar. So at this point, RBNZ must be concerned about the value of the currency, and as a result, they may try to drive the currency down just by talking about it or expressing concern about the strength of the currency. And then we also have Reserve Bank of New Zealand Governor Wheeler speaking at 9:10 p.m. Eastern on Wednesday. And then CPI and PPI numbers for China. Going into Thursday here, we have ECB President Draghi speaking. President Draghi did speak last week as well. However, he was very neutral. He didn't really add anything new to what was previously said, so there was no big monetary policy change. This week, we may see him toe the same line, so there may not be any big fireworks. However, because he's speaking, and usually market tends to get volatile when any of the central bankers speak, so be mindful of that. We also have unemployment claims for the US and goods trade balance number for British pound here. We also have on the same day Bank of Canada Governor Pola speaking. Last time their stance was a little bit more dovish. Even though the price of oil has been going up recently, there are concerns weighing on the Canadian economy, and as a result, even though we may not see an interest rate cut immediately, at some point we may start to see some of those issues weighing on Canada and the Canadian economy, and as a result we may be heading towards an interest rate cut. However, at this point we'll be open to comments on either side, hawkish or dovish. And then finally, going into Friday, we have German Buba President Weidmann speaking at 3 a.m. Eastern, and then going into the US session we have employment change and unemployment rate for Canada, and then preliminary UOM consumer sentiment numbers coming up. All in all, a lot of central bankers speaking, and as a result, we could expect volatility in the market this week. Let's take a look at the commitment of traders data. We'll start off by taking a look at Euro US dollar here, looking at the green line here, which is sloping downwards, which is the leverage money, which are these larger funds that trade for speculative reasons. And here we see the short positions have increased from 48,834 to 61,574. This increase in short positions is negative for the euro. Moving on to pound US dollar here, we actually see a decrease in short positions. We have gone from 47.38 to negative 310. So there has been a big decrease in short positions, especially with the referendum coming up for UK. There will be volatility in the market, and what we're seeing here, this suggests that the short positions are decreasing. They have been decreasing for the last few weeks. So pound may actually start moving up at some point. For Aussie US dollar here, we've been seeing a decrease in the long positions. We have gone from the high of 61,157 to this week we are sitting at long positions 11,114. So last week we were at 16,440 and now we are down to 11,114. So this will be negative for Australian dollar, and we could see the Australian dollar go down, especially with the Reserve Bank statement this week. Looking at New Zealand US dollar here, we have been seeing a decrease in the long position similar to Australian dollar here over the last few weeks. However, this week we have seen an increase in long positions. We have gone from 9,089 long positions to 10,822. So this suggests that New Zealand dollar compared to Australian dollar is stronger, and we may see it push up even higher. Looking at US dollar CAD, for Canadian dollar, we have seen the long positions have gone up slightly. We have gone from 13,053 long positions to 14,126. So this is slightly positive for the Canadian dollar, which means slightly negative for dollar CAD. Let's move on to the charts here. For Euro US dollar, looking at the weekly chart, that was a very strong close on the weekly here, and most of it was due to the non-farm payrolls number, which did not come in as expected. As a result, market has written off the interest rate hike in June, which is what was pushing the US dollar up. Now with the June hike off the table, we still have July hike on the table at this point. So we have Yellen speaking on Monday. Market will be paying a lot of attention to her comments, trying to gauge when the Fed is expecting to raise interest rate for the US dollar. Looking at the daily, we see a huge move to the upside here. Big inefficient move, and we could see the price come down and potentially into this 1300 level. However, we may have to wait a bit for the gaps to get filled. We could see another leg up before the gap gets filled, and the next move could go into this 1463 level. However, at some point during the week, we'd be looking for price to pull back down and start filling in some of that gap. So the support and resistance lines that we're looking at right now is 1375. This is where the price ended up after the non-farm payroll, and at this point we could see it push back into 1300. If it holds above 1300, we could see another push up into 1375 and then back up to this 1450 level. However, if the price breaks below 1300, we are looking at this 1250 level to go and get tested. Looking at the 1 hour chart, this 1210 level is where our breaking point is, and point of release is around 1150 level here. Depending on how things go this week, we could see this inefficiency get filled either this week or further down the road. So we'll be watching out for that. But for now, we'll look for a pullback into 1300 levels. So if it holds above that, we'll look for another push up back into this 1375 and even potentially into 1450, depending on what Yellen has to say and what Draghi says. However, if the price starts holding below 1300, we can see a move back down into this 1250 area and potentially even back into this range here. Overall, I am neutral on Euro US dollar. British pound here, we have seen a weekly close that was very neutral to bearish here. We saw price went and tested the high at 147.80 and then dropped from there. We did see a push up as a result of the non-farm payroll. However, that has now been filled and the price has started moving down. On the market open, we saw a price drop. We saw a gap down. So that gap could get filled. Looking at the 1 hour chart here, we are seeing that the price has gone all the way to 43.67. At this point, the Brexit concerns are weighing on the British pound, which is pushing the price down. So do pay attention to the poll results that come out, because those are the ones that are the main driving factors at this point. However, in terms of the macros, we do see that the British economy is not doing as great. Some of the numbers haven't come out quite as positive. So overall, though, the moves are being driven by Brexit concerns. So for the British pound, I am bearish on the British pound. We're looking at 143.30 to be tested here. If this level holds, we could see it push back up and back into this 145.28 area, or potentially higher. Overall, though, we should see volatility in the British pound going into the referendum. So some of the interesting areas would be 143.30 here, which is the previous low, and if it breaks below, we could even see it come into this 140.100 level, which is the next major support and resistance area. If it does hold at 143.30, we're looking for a move back into 145 or 145.20, and potentially even to the top here, 145.80. New Zealand US dollar weekly chart here, we see a big move to the upside, and now we're seeing a bit of a pullback. Looking at the daily chart here, highly inefficient move as a result of the non-farm payroll. Now we do have the Reserve Bank of New Zealand rate statement, and the market may start pricing in some of the dovish comments out of a Reserve Bank of New Zealand, and even a potential interest rate cut. And because of that, we could see this inefficiency get filled sooner rather than later, potentially even this week going into the rate statement. So we'd be looking for a price move back into the 68.50 area, and then further into the beginning of the move at 6800. So the first target will be 6850. I am dovish on New Zealand here. One word of caution though, we could see a pullback and then a move up into the high 7060 here. At this level though, we'll be looking for a sell. I'd be looking for the price to retrace back, especially ahead of the Reserve Bank rate statement. Moving on to Australian US dollar here, we saw a big move up. Price did trade in this range here for quite some time. For almost 2 weeks here, we were sitting in this range and price was not able to break below. And now it has pushed back into the higher range here, trading at this level. Again, big inefficient moves, as you can see, because of the non-farm payroll. And now at this point, we'll be looking for a pullback potentially into this 7,300 level. And then we could see a move back up. The next target level will be 7,400. Again, we have Reserve Bank of Australia interest rate statement. They're not expected to cut interest rate at this point. However, they may be concerned about the strength of the currency, and as a result, they may try to push the currency down with their comments. So we'll be watching out for that. I'm looking at 7,400 for a potential sell. If the price does go higher, we are looking at this 7,480 level, or even potentially 7,500 level for the next target. At this point, I'm looking for a pullback into this 7,300 level. Depending on if the price stays above this, we could take a move to the upside, or if the price breaks 7,300, we're looking for price to come back to test the bottom back into this range here. Dollar CAD, looking at the weekly candle, quite bearish, and however, we have come back into this support and resistance area at 12900 that the price was not able to break last time and had pushed off of that. So now we are going to see if the price will hold here. From daily perspective, it does look quite bearish. We do have the same type scenario here, big non-farm payroll inefficiency, and as a result we could see some of these inefficient moves getting filled. We will be looking for a pullback into this 130.20 area and maybe a potential sell-off from here if the price doesn't hold above. However, if the price does start trading above, we could even see it go back into this 131.60 area. At this point, this looks very range bound. We've been trading between 131.60 to 12900. So for quite some time here, we have been range bound. Have a great trading week, and I'll see you next time.